Good morning and welcome to our earnings season special today on Tuesday. And well, we've got a bunch of S&P 500 companies crossing today with their third quarter earnings. So we'll try and give a quick rundown of some of those in due course. A couple of notes today. This morning we've had Bunzl, that's FTSE 100 company, reporting numbers broadly in line. Full year guidance unchanged after their Q3 trading update saw a 1% decline in like-for-like underlying revenues, but a 1.5% boost from acquisitions. So Bunzl very much in line. Whitbread also seeing slowing revenue growth and revenues actually falling, profits down as well, but they're accelerating their push into Germany and scaling back their growth plans for the UK. So I think really what we need to look at is short-term uncertainty facing Whitbread in terms of the UK market, particularly the regional market, and then longer-term huge growth opportunity in Germany where that sort of sector is really untapped at the moment. So that's the UK side of things. We've also just had some news in the last hour of a counter bid for Just Eat from Prosus. That's after obviously Takeaway.com is currently the favoured bidder, and the board of Just Eat has rejected the bid from Prosus. The 710p cash offer from Prosus has been rejected, and so they're sticking with Takeaway.com at the moment, but there could be a bidding war now. We could see others coming in. Shares up 24% as we speak after that. Currently trading around 733 pence, so well above the 710 pence that had been targeted by Prosus. So coming up though, we've got a bunch of, as I say, S&P 500 and some Dow components today. We've got McDonald's reporting third quarter earnings before the bell, so coming up shortly. We're forecasting earnings per share of $2.21 on revenues of about $5.5 billion, and that's comparing with EPS of $2.05 and revenue of $5.34 billion in the previous quarter. Those results had sent the stock to an all-time high, and shares of McDonald's are up around 18-19% this year. So we're expecting more good progress from McDonald's. They continue to do very well. UPS is also reporting its numbers before the market opens today, so coming up in the next hour or two. It's coming off a strong second quarter earnings, that pushed the stock up around 9%. We're expecting $2.03 thereabouts, compared to $1.96 previous quarter. We know that their next day air service volumes have increased 30% in the second quarter, so we're looking at how that division is faring. Procter & Gamble also coming out. The big focus really on the organic sales growth here for these sort of fast-moving consumer goods companies. That's really where it's all at. So organic sales growth expected at 4.8%. Beauty sales expected at 6.2%, healthcare is expected at 5.2%, and 4.67% expected in fabric and home care organic sales. Baby, feminine and family care around 2%. So those are the numbers that we're looking at there. Chipotle also coming off a very strong year. Talking about McDonald's, Chipotle has been doing very, very well. Stock's up 100% this year, and it's the best performing stock on the S&P 500. So we're expecting same-store sales of 9.3% growth, and we're expecting earnings of $3.21 per share on $1.38 billion in revenue during the third quarter. And then finally, the other big one that we're looking at, Snap. It's been on a big rally. It's up 160% this year, as it's really rebounded after its disastrous post-IPO period, but the stock is still trading below its $17 IPO price. We're expecting an adjusted earnings loss of 5 cents per share on $440 million in revenue. Expecting options market, this is from CNBC, the options market expecting a 15% move in either direction following the results, but that would be less than the 18.5% that we've seen over the last few quarters. So Snap is one that definitely you might want to be looking at, potentially a big move happening when the market opens after their earnings get released. So that's it for now. We've got a lot of earnings coming up, and there's lots more this week, so do tune in. We'll have more for you every day this week on our earnings special. Thanks for watching.